Hello everyone, welcome back to the first time home buyers seminar, second part of it. Actually today we're going to be talking about income and affordability. I've broken down some details for you. All the time you hear people talk about ratios when you actually go to get a mortgage, and you have brokers talk about it, you have a banker talk about it, but it's good to know as to what you can qualify for. And it's best that I break this down for you so that you can do this exercise at home yourself as well before you could even talk to anybody as far as you could afford a home or not. For today's example, what we used is $50,000 income, which is pretty standard in the industry. Like, I mean, everybody makes an average of about $50,000 nowadays. We're going to be talking about debt service ratios and what they mean to you as far as your income goes. There are two kinds of debt service ratios. One is called the GDS and the TDS. Again, to break that down, what that means is a gross debt service ratio, which actually has the principal and interest payments on your mortgage, and you also have to add the taxes and the heating of your property as well on there. The TDS, which is the second part of the debt service ratios that a lender looks for, and also the insurer, is your total debt service ratios. Now, total debt service ratio also includes the total, whatever is included in the gross debt service ratio, that is the principal, interest, taxes and heating, plus your existing debts. Now what I mean is that you do not need to take your entire debt. You need to take at least a minimum of 3% of your outstanding balances. So suppose your balance is $10,000, you've got to use $300. So base it according to that, and that should give you an accurate number. Remember, car loans also fall in that, so you have to remember to add those numbers up for yourselves, okay? So what we did is, based on the $50,000 income on GDS, so basically what we did is, the lender's guidelines are 39 and 42. This is again based on your credit scores. If your credit score is low, then the ratios are kind of, guidelines are much lower, but we use this as an example at 39 and 42. Lenders do also try and get you exceptions. If it's a conventional deal, that means you're putting more than 20% down, as on ratios with 42, they would go up to 44%. Now on GDS of $50,000, we used 39% of that. That works out to $19,500. I just divide that by 12. So your affordability is $1,625 a month. Now right here we have taken a purchase price $250,000 with a 5% down as a minimum. So your actual mortgage amount should have been $237,500. You add your premiums, your insurance premium on that. So your mortgage that you're going to be starting off at is at $244,031.25. What that translates to as a monthly payment, and again I use this monthly just for guideline purposes. We normally always recommend an accelerated bi-weekly payment so you pay down your mortgage faster. But in this example, we're just going to use a monthly payment. Your monthly payment on that is $1,154.87. I just use an average property tax of $250 a month. Your heating, we use an industry average about $85 a month. Outstanding credit cards and loans, I use $200, provided you are at that number, but in case if it's higher, you got to add that on there. So that gives us a total of $1,689.87. Now, as you can clearly see, that actually is your TDS number. That clearly qualifies you for the 1750 TDS, that is total debt service ratio, so your number falls below that. So you should be fine actually based on that for approvals. Going to the GDS, which is the gross debt service ratio, you add the 85, which is your heating. Then you have your property taxes and your principal and interest payments at $1,154.87. That gives us a number of $1,264, and that ties in perfectly well with the $1,625 that is maximum permitted on gross debt service ratios. Again, based on this comparison chart, it's pretty easy to run these numbers yourself. You could enter the numbers down yourself and see if you qualify as well, rather than just blindly, trusting anybody to try and give you talks on debt ratios. So you should actually be able to figure this out yourself. And if there's any other questions, by all means, do give us a call. We'll be happy to help you and actually tell you what you qualify for. And good luck with your purchase. And the next time we're going to be talking about credit as well as how to set up your team with the realtors, brokers, and your lawyers, and trying to actually get everybody together with your first home purchase. Thank you for listening in, and until next time, bye for now.